Munis are part of asset allocation. They're not everything, but they're for tax-driven investors that need investment-grade work, because you're not going to find, in our opinion, better options in other high-quality corporates or government. The muni sector is a big part of the closed-end fund universe in the U.S. About a third of all funds traded. There's national funds, there's state funds. Why they do so well in the closed-end fund structure, in our opinion, is the fact that there is permanent capital and muni bonds aren't always liquid, and allows managers to take credit decisions to leverage their analysts at their firms. Also, there's leverage available to closed-end funds, which historically has been low. Right now, the average cost of leverage from our data is about an inferred 1%. Some leverage is below that, some is above. That's very cheap. And with discounts now about 5 to 6 for the average for the sector, but it's not hard to build a portfolio at 6 to 7 if you're thoughtful, you're getting close to 6 yields on 90% investment grade. So current discount levels for closed-end fund muni funds versus historical levels, typically 3% is normal. If we were sitting here 2 years ago, a 3 premium, which is 6% higher than that, would have been normal. They bottomed out close to an 11 to 13 discount in the uncomfortable fourth quarter of 2013. So right now, you're getting a 2 to 3 to 4% on average extra discount. So the best way to compare muni funds to each other, a couple ways. You need to think about liquidity as part of it. Can you get out if you need to in a reasonable period of time? But that shouldn't be the only factor. We judge manager performance. We look at the cost of leverage, because that's a fixed rate that's not based on how smart or successful the management of the firm is. We look at the duration figure, which is adjusted for leverage, so it makes it around 8. But we also look at whether there's call risk, more call risk in the next 1 to 2 years, or more maturity risk in this 1 or 2 years. We'd like you to continue to focus on good NAV, good discounts, and where you want to be in the leverage piece. I'd say if you're a tax-driven investor, it has a tax-free yield if you have high enough income in New York City from our research of over 10. And that's very hard to give up for the investment grade part of your portfolio. And it's kind of like a hedge against equity markets doing badly.
For more information and data on closed-end funds, visit our sponsor, CEFconnect.com, the authority on closed-end funds. This is Closed-End Fund News.